I grew my TFSA to over $100,000 by doing this. Your TFSA isn't just a savings account. It's an investment powerhouse. And as someone who spent 7 years managing a billion-dollar portfolio at one of Canada's biggest banks, here's the truth. You don't need to know everything to get started with investing. Some of the biggest and most successful investors started by just buying one ETF and making time to put in effort to learn along the way. So, I'm going to share with you how I would invest my first $10,000 if I just started investing in Canada in 2026. But let's not get ahead of ourselves. Before you even think about investing, you should build an emergency fund. You can use a high interest savings account with Wealthsimple, PC Financial, EQ Bank, or your bank's high interest savings. This is because investing is not a magic fix for your finances. It's a tool you use to build wealth after you have a foundation, a solid safety net, and a proper plan for your budget. And now, the moment you've all been waiting for, how I would invest my $10,000. First, I would put 30% into VFV. This is the Vanguard S&P 500 ETF. Essentially, it invests in the 500 biggest companies in the US stock market, but it is the Canadian version of VOO. Same thing, it just trades in Canadian dollars. You can buy it in Canadian dollars, so you don't have to worry about foreign exchange fees. Top 500 companies in the US, so you can think Apple, Amazon, Nvidia, Nike, McDonald's. I'm done naming them. Next, I will put 25% into XIU. This is the iShares TSX 60 ETF, and this invests in the 60 biggest companies in Canada. So you can think RBC, Shopify, Enbridge, BC Bell. And these are often great dividend-paying companies. So it's honestly what most Canadian stocks are. So this ETF actually pays around 2.5 to 3% of dividends, depending on the year. Next, I will put 20% into TEC. This is the TD Technology Leaders Index ETF. And this essentially invests in the global tech space. So big companies on a global technology level. Most of them are American because honestly a lot of the big companies in tech are from there, but it gives you some more diversification and a little bit more aggressive growth because that's essentially what the tech space is. So if you like a little bit more risk in your portfolio, this is the perfect one to have. Number 4, I would put 15% into XST. This is the iShares Consumer Staples ETF. And this essentially covers goods that are essential for human beings. So think groceries and things like that. So we're talking Loblaws, Metro, Sobeys, and those other companies that you basically need on a day-to-day basis. This is a nice balance for the rest of the portfolio because it reduces your risk. It's less volatile. In tough economies, these companies will still be used. And last but not least, 10% I would put either into, I'm going to give you two options here. One, you can go global. Get yourself some international diversification. Let's leave North America. You can use something like XEF. Or alternatively, you can make it personal. So you feel free to use this 10% into something that you personally believe in so you can get more personally attached to your portfolio. For me, I like video game stocks. My 10% goes to video games. So stop spending on PlayStations and stuff, and I started putting that into the stock market. So I guess those are adult moves, they call them, right? And so with this setup, you have Canada, US, global stocks, a balance of growth and stability, some dividends for a little bit of passive income, and lastly, room for your own personal choice to make it feel like it's yours. Now here's how to set it up. Open up a TFSA if you don't have one already. I personally like to use Wealthsimple or Questrade because they don't charge commission when you're buying stocks or ETFs, and I like to save me some money. And search up the ETF tickers, the symbols, and make sure it matches the names that were listed in earlier. Don't worry about the exact dollar amounts if you want to tweak things a little bit or buy the shares a little bit more differently. That's totally up to you. This is how I would invest my funds, and set it, forget it. Add more money if you can over time so you can dollar cost average. You do this by setting up a pre-authorized contribution into your TFSA. Remember, this isn't a get-rich-quick scheme. Sometimes your portfolio will be up, some months will be down, right? The idea is that with a mix of Canadian stocks, US stocks, tech stocks, global stocks, consumer staples, a personal choice that you believe in, you have a nice healthy balance of growth, dividends, and stability during whatever economic times that we're facing. You're diversified and investing with purpose. And remember, this is how I would invest my $10,000. If you're following along, always remember to match your investments with your goals, your life goals, your personal goals, your financial goals, your budget, your income, and your risk tolerance. And you don't need to be an expert. You just need a plan that makes sense for your goals, your lifestyle, and your financial future. All right? So the TFSA makes the most sense to me because it is tax-free growth. The CRA does not take a cut from this. All right? So start small, stay consistent. Even $50 a month can turn into thousands of dollars over time. Trust me, your future self will thank you. And if you've enjoyed this video, please hit like and subscribe below for more videos like this. If you would like more deeper breakdowns and information on investing in Canada, I do have a free weekly newsletter where I share more Canadian investing tips. The link to join that is in the description below. Cheers.